Thomson Reuters GFMS says less silver is being mined with production falling for the first time in over a decade. So what could this mean for silver prices? Joining me now in studio is Johann Wiebe of GFMS. He joins us on the same day his firm released the World Silver Survey report. Welcome to the show. Good to have you on.
Thanks for having me.
So I read the report with great enthusiasm, and this point really stood out for me, the fact that we haven't seen this drop in silver production in 14 years. What are you basing these numbers on?
Yeah, that's a good question. Absolutely, one of the key takeaways from the silver survey in 2016 was definitely the drop in silver production in the first time in 4 years. And
14, right?
14 years, right. my apologies, absolutely. And the main driver really was the policy that many miners had put in place in the previous years, constraining capital expenditures in order to reduce production and focus more on the margins. And now as an end-up effect, kind of rolling out to the years that we have now, we see production coming off as a result.
So a supply crunch is inevitable, or?
Supply crunch to a certain extent. We'll see a decline of supply going into the couple years following this year as well. So we don't think it's going to be a one event that we'll see the dip and then continue rising supply going forward, but we'll see it's going to be a prolonged trend for at least maybe like 2 to 3 years as well.
So Johann, of course, the next question is, what does this mean for silver price?
Yes, of course, that's a good question, and we get that quite a lot, obviously. Fundamentals, I have to make a comment, fundamentals obviously play a big part of a commodity market and determining the price of it as well. But with gold and silver, it's a little bit different as opposed to with base metals, for example. Base metals get fabricated into downstream products, and therefore it's far less liquid in regards to the material coming back to the market. With gold and silver, you have this stock overhang, which is quite liquid in the form of jewelry, in the form of bars and coins. So despite the fact that we might have a 4-year market of deficits, that doesn't necessarily have to have immediate impact on the prices going forward, because you have this liquid stock available to the market that can feed the market as and when it has to.
So are you thinking that silver is going to stay in this range right now, or?
So yeah, obviously then what does this mean for the price going forward? Now fundamentals definitely play a role, but maybe not as strong as base metals. So based on the fundamentals and based on, for example, on the macroeconomic developments, we see still a bit of progress for silver. We downwardly adjusted some of our forecasts compared to what we had last year, but now we see silver averaging this year $18.70.
Okay.
A bit of an increase of what we had for this.
Because, you know, since silver hit its high mid-April, we're down about 13%.
Yeah, that's true. We've seen quite a bit of a correction, and that to a certain extent is not surprising, particularly if you look at the underlying dimensions of the market. On the one hand, we've seen last year very weak physical demand for investment products like coins and bars was down, but on the other hand, you saw strong ETF of ETP uptake of around 47 million ounces last year. At the same time, if you compare, for example, the future positionings of some of the guys in the managed money on COMEX, the picture couldn't be a starker contrast either. Gross longs and net long positioning was very high as opposed to the net short position in 2015. So there was far more positive sentiment. So that reversal now might well be one of the reasons that we've seen a bit of a dip in the price.
And Johann, finally, before I let you go, was there anything in your preparation for the report that really stood out for you, where even you said, "Wow, that's something interesting that happened here for silver"?
Yeah, that's good. There's so many interesting things constantly happening, right? So it's difficult to pick just one. I think the one I just mentioned between the dichotomy in the market, that physical was down, whereas the ETFs and the future positioning was actually up. So a bit of a disconnect, you could say. The other bright star, so to speak, is still the solar sector, I think, which stands out, or which needs to be reiterated.
Yeah, I saw that. Like that demand for silver in solar products was up 34%.
Yes,
right?
Yes, exactly. It's not just strong, but it's also one of the only key demand sectors that still has a decent performance. All the others were basically either flat or down.
And is there a replacement, something else that can be used in the solar panels besides silver?
Yes, there's definitely technological advancements. One, of course, is obviously the thrifting, which means like less metal content per item. That is always going to push some of the manufacturers to obviously reduce cost. Other technology they're looking at is looking, for example, aluminium to substitute silver away.
So we can't just bank on silver to fulfill all these needs, right? We have to hedge that, people will be finding replacements. Well, Johann, thank you so much for joining us in studio.
Pleasure.
And thanks for watching this edition of Kitco's Gold Report. We'll be back tomorrow.